Yo, what's up, everyone? It's Reese, and I'm here with Jason Akeem, and we're the Diversified Gentlemen. And today we're going to be talking about investing 101 and how to pick a stock. So stocks is something that's very intimidating, and I didn't get into it until someone like one of us that looked like one of us basically sat me down and said, hey, is this simple? If you got a bank account, your current bank institution actually offers this program. So to back up, before we get to that point, we got to understand the difference between investing and savings. So Carter, I know this is your baby. I know you're passionate about it. So let the people know.
Yeah, man, me getting this one. So my background is I call myself a professional saver. I knew how to save every little dime I had since I was like 18. I always saved 10% of my money. And I'm thinking I'm doing well. I'm thinking, yes, I'm going to make it there. However many years, I'm going to have plenty of money. But what I did not know that saving is good as far as holding money back, but it's not good when you're trying to grow your money, because saving money is not going to grow it. Whether you save it in the bank or you save it under your mattress, or somewhere like that, it's not going to grow. Now, the good thing about it is your money's not at risk. I mean, you can't lose it. When you're saving it. There's no risk to it. There's no loss. And then you got the other side, which is the investing. You invest, you put your money at risk, but that risk you're taking, you also get the opposite side of able to grow your money, where you can grow it. And that's where I kind of didn't know until I was like maybe 24, 25. So I had saved for years, didn't realize that I could have made a lot more money if I had invested. So when I learned how to invest, it opened my mind to everything. I told you guys before, when I learned about it, I was mad. I was like, why nobody told me this? I could have been doing this for a long time. It took me a little time to catch up because I didn't know about it. I didn't know. And that was the biggest thing, is how do you get to that point where you know? You don't know what you don't know. And that's basically how it is.
Yeah, I actually had a cousin when I was about 23, 24. He was a millionaire, and he was talking about investing, and I was saying, I forgot what he said. Maybe it was like 1,000 or 5,000 if I had the money on hand, and I was like, man, I can't afford to lose 5,000. And he basically said, if you can't afford to lose 5,000, you can't afford to make 50,000, and that always stuck with me. That always stuck with me.
So, I like that.
Yep.
Yeah, for me, I was never really a saver because I was never taught how to save. You know what I mean? Like, especially when I first joined making real money, I'm like, man, I'm trying to spend all this. New clothes, you know what I mean?
Yeah, you only live once. Hey, you only live once, right?
Exactly.
Get that first check, I'm buying some Timbs right now.
I'm buying Timbs right now.
135 a pop.
Oh, and you already know, Jason, back in Japan, man, I think I had like 12 different pairs of Timbs.
And you probably had the Pokemon Timbs and Dragon Ball Z Timbs.
I had all of them joints, bro. But it wasn't until I actually met one of my homeboys in California. He was a millionaire, and we were the same rank, and that is the first time my eyes were open to investing. He kind of sat me down and told me what to look for, the stocks that he had got into early in the game and how it changed his life. And that's when that light kind of turned on for me. So I was never really a saver, but definitely got drawn into investing early. Not saying I was good at it, but it definitely caught my attention pretty early in life.
So basically just saving is keeping your money safe and secure, making sure that whenever you need it, you're able to retrieve it when the time is there. But investing is actually putting your money to work. It's like sending it out to school or something, sending it out for a 9 to 5. And when it comes home, it's bought you some returns. And that's very important in a strategy, because the more you do that and that it compounds, that potentially could actually pay for assets liabilities you want to get, or actually more assets that generate more cash flow and will be enable you to buy more liabilities and essentially basically retire earlier.
Right. Well, something Hakeem just said too. I mean, wasn't a big saver, but it's important to learn how to save so you learn how to invest, because you have to have the money available to be able to invest. And if I go back to, I dropped a video, last week or something, or earlier this week, talking about budgeting. And that's where it all starts, man. If you can't budget the money you have right now, forget about saving, forget about investing, because you're going to be always trying to catch up, always trying to keep up, because you check the check and where'd the money go? So you start off with budgeting and figuring out where all your money is going. And then from there, you can figure out how much can I save? How much can I invest? So before you even think about those two things, budget the money you have right now. But know where it is, know where it's going. You have to know that. That's the basics.
Yeah, I think I heard someone say, I can't remember who said it, but cash is king, right? In certain aspects. Not saying that investing is greater than savings, because it's all about temperament, right? It's all about what you can handle. But if you are investing or you are saving, you got to have the cash to do it. And it goes back to what you said about budgeting. You got to know where your cash is going so you can have that excess cash to either save or invest.
Right.
Absolutely. Yeah, so let's get into some terms, because a lot of people use them interchangeably when they talk about stocks, mutual funds, index funds, and even options. So let's tell the people what's the difference in each asset.
When we talk about stocks individually, you got to break it down what a stock actually is. People say, what's a stock? They say, buy stock, stock market, stock this. A stock is basically a share of a company. If a company is doing business, they're offering you a share of their company based on a certain price or a certain stock as part of that company. So now you are part ownership of that company. That does not mean you get to make rules, you get to call board meetings, but you have a majority share, but it gives you a share of that company, meaning that company does well, you'll do well. We'll break down how that comes out as far as monetary value, but that's basically what it is you own a share of that company. So for easy math, if a company has 100 shares out there and you own 10 shares, then essentially you own 10% of that company. Now, on the big mass of things, companies are big, they're grown. You're likely, as a regular everyday investor, not going to own a large amount enough to be able to have controlling share. You're going to have enough to make some money, make some cash that you can invest more. But that's the bottom line of it. It's just a share of a company that's already exists. That's the basic definition of what a stock is.
Absolutely.
So in regards to, I guess, a deeper dive into stocks, I guess you can split it into two different categories. So you have your growth stocks and you have your dividend paying stocks. Your growth stocks, you can look at them as new companies that have a lot of room and potential to grow into something bigger than what they are today. Those are your growth stocks. You can look at, let's say, like Facebook. Facebook could still be considered a growth stock, even though it's been around for years. The potential or untapped market is still available to them. While your dividend paying stocks are usually more solid, solidified, older companies that pay a dividend. So essentially they will pay you as a shareholder a dividend. Usually it's either a month or a quarter to stay a relevant shareholder in the company. Two different facets of two different ways of investing. Although you're still investing in stocks itself, it's two different ways to invest. Some investors look at growth stocks as a more aggressive approach, while your dividend stocks are a more obviously less aggressive approach.
And one important thing too to think about when you talk about growth stocks is you don't make any cash or any revenue on that until you sell it. That's the thing with growth stocks. They're very, very important. So if I buy a stock and it's worth $100 and I'll keep it forever, and now it's worth $300. On paper, yes, it's worth $300, but I don't actually get those gains until I actually sell that stock at that higher price.
Depending on where you are in life and your strategy, for instance, the younger you are, the more you probably should be looking into growth stocks. The older you are in either life or your career, you may want to so if they're paying a dividend, 9 times out of 10, they're less riskier stock because they're more established. you probably want to move into that direction. And I think you're about to get into it with the dividends paying you. It's no kidding, a stock paying you every quarter. And you can either reinvest that into your account in a drip. What is that? A dividend reinvestment plan where you actually take those dividends, and instead of it going into your account for a cash value, you're just buying more shares of a company, right? If you're 60 years old and you've got 1,000 shares of a very lucrative company, those dividends could be hundreds, if not thousands of dollars that you could actually just have that in your account living off of. So it depends. I recommend, where I'm at, or not what I recommend, but my preference right now is growth. So I'm in the Teslas, the Amazons, and it's things we use every day that people are just like, seem like, Facebook's been around forever. Apple's been around forever. But when you bump them up against the, the GEs and the Walmarts, the AT&Ts, they're really new companies.
Very new. Yeah, I mean, that's a good point. I mean, we are in such a hyper growth society right now that if something is 7 years old, it's ancient. You know what I mean? Well, we forget companies like GE, they've been around since
the 1800s, I think.
1800s. So in comparison, a lot of these technology companies are very, very brand new in the grand scheme of things. And it kind of goes back to what I said earlier. Their untapped market and room to grow is exponential. But I caveat that with not all growth stocks are good stocks, right? So
stocks, period.
So I mean, it's kind of like looking at Facebook versus a MySpace. MySpace never publicly traded, but if it did, it probably would have went the way of Blockbuster when Netflix came on and kind of took over that space. So you definitely want to look at what a company is, their future plans, and what that market looks like. What does their competition look like? What is their competition doing? Because that can be detrimental to a company and your stocks if you're a shareholder.
Yeah, people got to remember too that when you put that money into a stock, into a company, putting that money at risk. The risk is you're hoping that company continues to progress, continues to make a product, produce, and you're at the whims of the leadership of that company. Is leadership effective? Are they still making decisions that are going to be effective for that company? Because if they're making bad decisions, that's going to affect you as a stockholder. So that's part of the evaluation of trying to figure that out, trying to figure out where you're going to put your money and where you're going to put your faith in. Because when you think about the tiers of investing, you got the stocks, W-2 income, you got businesses, and then you got that what I call the natural resources type of investing. At the top of that pyramid, you have stocks. And it's the higher risk of all investments, but the reward is high also, depending on if you do your research properly and invest in the proper companies. And like I said, the best way to invest in a company is invest in ones you know and you use. If you know you're using them, and you're using them constantly, it's safe to think that, hey, I might as well have an investment in this company. I use it all the time. If you're using Amazon every other week, getting packages in the mail from FedEx or from UPS, then maybe you might want to invest in a company you're using all the time. Just think about it that way. That way it takes the guessing game out of what do I invest in, and you're chasing down the next hottest thing. Just invest, keep it simple. You invest in companies you use all the time.
Yeah, so let's talk about that. Let's just talk, how do you pick a company? So with your 5, 10, 15 years of investing experience, what's those companies you hit out the park, and what's the companies that cost you, an arm and a leg, and you learn from, and basically, what did that teach you about picking a company?
So I'll start off. Firstly, I started off with penny stocks. Probably the worst investment move ever. But I mean, it's like you hit some and you lose some. And I think when you hit, it kind of keeps you motivated, like you're going to hit again. But it's such a risky invest. And I don't even call it an investment because it's more of a bet to me when you're in penny stocks. But solidified companies, what I usually look for is the ones that I use. I mean, it's kind of like what we've been saying. I use these companies. Like, I know they're not going anywhere. I'm an avid coffee drinker. I love Starbucks. I invest in Starbucks. I mean, they're not going anywhere. Recently, I've been buying stock in Pinterest, and I kind of promote Pinterest as, I don't think it's going to be the next Facebook, but I like their model, right? I use Pinterest. I like their model, and I like their customer base. A lot of their customers are women. Women are very loyal customers. Like, it's kind of knowing your surroundings and the customers that they deal with. Women are very loyal. Once they kind of get into something, they usually don't stray. It's kind of like a black man and a barber. Once we find a nice barber, we don't stray from that barber.
No, facts, bro.
It's just how it is.
Facts.
So,
Hey, that's right.
With women, it doesn't matter the price. If they like the product, they're going to stick with it. So I kind of use like little tidbits like that to help me choose certain stocks. But there are those that you may use that turn out bad. And I go back to the Blockbuster scenario, right? If you have stock in Blockbuster, you might have been using it and not really paying attention to Netflix. It would have been a foul because you would have been buying Blockbuster, and Netflix is over here in the weeds, starting to grow into this, into this flower, and you're not really paying attention to it. So you have to be, you want to take your emotions out of the companies and stocks that you pick as well. Take your emotions out of it and use some logic and due diligence. Because if you just blindly invest in companies that you use, it may be detrimental. It could be.
Yeah, my journey was a little kind of like yours, King. So I started off in penny stocks, same thing. They was hidden, some were hidden. I was like, this is phenomenal. This is the best thing since sliced bread. I'm about to be a millionaire in 3 days.
Yeah.
Then you have those days where it's like, I'm not gonna buy food this week because that money's gone. It's bad, man. So I learned some hard knocks, man, doing penny stocks. But what I did learn also is that you have to find value in what you're actually investing in. You can't just pick what you think is hot. You cannot do it. So as I evolved in my financial journey, I kind of shift kind of different where you are. I kind of focus my stuff on, okay, what do people need? Not necessarily want, what do they need? So now most of my stock portfolios, different portfolios. You have your dividend stocks that are paying themselves. You have your growth and value stocks. So for dividends, I kind of focused on investing in energy, utilities, steel, land, things like that, things that people need. The way I figure, people got to have lights, they got to have energy, they got to have certain resources. So I put my investments now towards those rather than in retail. Because retail, when it comes down to it, people can stop buying things. They can stop, buying.
Yeah, the pandemic proved that. The pandemic,
for sure.
First thing to go.
Hey, definitely. That's why I'm really big in utilities. But people are gonna probably not forgo their water, their clean water, or their energy. So I kind of shifted a little bit. As I got older, I kind of shifted towards those things. But they won't grow as much as the retail or the other kind of value stocks. So you got to take that balance. You got to be able to balance that out. So I'd say when I was in my 20s, yes, it was all about what can grow the fastest and the most. That's what I want. And as you transition to your 30s and I'm in the 40s, okay, what is the safest that can still bring back income and that can still pay me enough where I can sustain without having a higher risk? That's how I kind of transition from my stock journey. So it kind of depends on where you are in life, how you
and
invest.
It's also your temperament too. Some people are just risk averse. They don't like a lot of risk. So you might go into a company like a Walmart, for instance, that it's not going anywhere, right? The stock will, it'll move, but it may not move like, like a Netflix or a NVIDIA type stock. You know what I mean? It may not move like one of these technology stocks, but you're still invested, right? You're still making money. You're getting paid dividends. And you're also more risk averse because Walmart's not going anywhere. It doesn't matter what type of pandemic we're having. Walmart's going to be around. So And also, I'm glad that you guys brought up Corona. So it kind of goes back to what I was saying with knowing the customer base and what like the target audience of the company. Also paying attention to social events, right? Coronavirus, the pandemic itself was detrimental, but a lot of people made a lot of money off this pandemic. So you have to be able to pivot. And that's why it goes back to not being emotionally attached. You have to be able to pivot based on what's going on, not only with the company, but what's going on in the world. So, because you can use that to your advantage.
No, I agree with both of you. I was fortunate enough to never get into penny stocks, thank God.
Yeah.
Good on you, man.
But
Good
I
decision.
actually got into stocks. I was on vacation with our boy D, and he was, yep,
Shout
Shout out
out
to
to D.
D.
yep,
Yeah, he put a lot of people on.
the OG, yep. So
Yeah, he did.
he was basically our second day, first day there. He was like, I just woke up, opened his phone, I just made $80 taking a nap, and I'm like, so what is this about stocks like? Because to me, I'm thinking, you got to have a stockbroker, you got to wear a suit and tie, and he
Like the
looks just
old
like
school
us.
way.
Yeah, he looks just
Yeah.
like us. So, long story short, he's like, hey, you bank with, USA. I'm like, yep. He's like, this is what you need to do. Open a brokerage account. You can do it from your phone. And once you do that, put $100 in there, and you can start trading. I'm like, awesome. Too easy. What do I buy? And he's like, look down at our feet. All three of us got Nike flip-flops on. Invest in Nike. You know what I mean? And I always tell people not to get too cute. Meaning, don't chase the next corona vaccine or that, super chip that's going to take the space shuttle to the moon. Like you guys said, everyone uses Amazon. Everyone watches Netflix. Everyone um, eats at McDonald's, right? They've been there forever and they're not going away. And then you may dive a little deeper. When you brush your teeth, that company is publicly traded. Johnson and Johnson is publicly traded. So there's just so many options where you don't necessarily have to do tons of research to buy that particular stock because technically you've been doing it your whole life, right? So usually, like with Apple customers, they usually have an iPhone, iPad, a MacBook. You know how it works, and if everyone in your family, all your friends have it, you know how much it costs. You know when the next one's going to drop. You know the speed. That's research, right? You already know the ins and out of that company. That may be the first stock to purchase. So that's the philosophy I go by, and that's the advice I give new investors.
Reese, you brought up a good point with like individuals. I mean, it's something as simple as every day brushing your teeth. Mm-hmm. If that company isn't publicly trading, look for a parent company. That's one thing that I had to learn throughout the years is like, like these restaurants, let's say Applebee's and Olive Garden, they may not trade publicly in a silo, but they have a parent company that trades. Yeah. So look for those parent companies as well. I mean, especially
like Google's one, right? It's Alphabet.
Yeah. It's Alphabet.
Alphabet. It's not Google.
Yeah. Or like you said, Johnson and Johnson. Johnson and Johnson. I mean, they have their hands in everything. Mm-hmm. And they're a parent company. You would have to look that up to find that out. You know what I mean?
Right.
It's simple.
Just simple things too. I remember months ago when our kids were big on Fortnite. They were loving it. Everybody was playing Fortnite. I mean, when people winning millions of dollars playing, young kids looking at it, I'm like, man, I wonder how do I invest in Fortnite? Talking to my daughter about it. So we started searching, found out it was a company called Tencent. I'm like, all right, hey, you want to buy some shares in that? She's like, yeah, do I invest in Fortnite by doing this? But they don't invest in Fortnite directly, but the company that drives this brand, there's a company that owns that. just observation. You know, it's seeing things you didn't know, you know, or think about. You know, like you said, that company may not be the ones you can invest in, but you find out, do some research, find out who owns what, then find out who's being publicly traded, then you buy that.
And also to that, so when I invested in Nike, I started doing research, and then it gives you articles of similar companies. For instance, like Under Armour. Granted, I ended up losing money in Under Armour because I had to sell it. They just kept dropping. But when you get a company, for instance, if you research Microsoft, more than likely you're going to see a bunch of articles on Apple. If you research Amazon, Alibaba is going to probably pop up, and then JD is going to probably pop up. And then if you have a good search engine, you're going to read articles that compare and contrast. For instance, the reason why I was so interested in Nike, I knew this was maybe 6-7 years ago. I knew Nike was the dominant company, but they compared the charts, the growth charts, and over like the last 24 months, Under Armour was exploding, and they were only like 15% of Nike. Granted, Nike is still growing, but Under Armour had a lot more room to grow. And when a company has a lot more room to grow and they do it successfully, they're going to make more money. So that's why I ended up throwing a lot of money into Under Armour. Unfortunately, it didn't work out, but that's how it is. So let's give the people something to take home with them while we wrap this up. So give me something that they can do today to get into the stock market or in investing.
If you own a cell phone, you can buy a stock. So all you got to do right now, you can literally, Google it, whatever, how to buy a stock, and you download whatever company that has that app. They all have apps now. This is 2020. There's an app for everything. Whether you want to use Charles Schwab, you want to use Fidelity, you want to use everybody using right now, Robinhood. Doesn't matter. If you got a cell phone and a connection, whether it's data or Wi-Fi, I don't care, you can buy a stock. That's it. You can buy a share of any company that you value. So if you got a cell phone, you don't have an excuse. So I say, get your cell phone, pick a company, I don't care what it is, and then dive in and try it.
Yeah, that's an easy kill. I would say once you listen to Jay, you download your brokerage account, you open a brokerage account, you actually start trading stocks. Always buy on the dips, whether it's a company that you own and the stock has dipped or the market holistically has dipped. You want to take advantage of those price drops. And also, if you're looking at a company that you like and that you aren't investing in, use that dip to your advantage, because now you're buying the stock at a discount per se. Once again, when COVID popped off, the market dropped precipitously. I'm on my TI stuff right now. So,
it was like
exponentially.
Expeditiously. I mean, it's, you want to use those moments to your advantage. Whether it's the president saying we're going to go to war and the market reacts a certain way. If there's, we call it blood in the streets. There's blood in the streets. Man, cash is king.
That means the market is red. That means it's on a decline. Everything is red. So it's a bloody day. Okay.
Exactly. So you want to go and buy those companies that you own for a discount, or you want to jump into a company that you don't own but you've been looking at. Maybe the price was a little bit too high. Now you can get it at a cheaper price.
Yep. Awesome. So the only thing I have, once you do your due diligence, you find the right stock. You open your brokerage account, you buy on a dip, which is a discount. I always recommend to not sell, be patient, keep that stock, and not even think about it. A lot of new investors, they look at their stock portfolio every day or even hourly. I'm not sure why. This all it does is cause anxiety, right? So there's been several stocks I've sold. For instance, Alibaba years ago. Pinterest a few months ago. I remember Hakeem endorsing Pinterest when it was 17, 18, 19 bucks, and it was chilling at 17, 18, 19 bucks. And to me, I'm like, yo, this stock is boring. Like, it's not doing anything. Alibaba, when it was, $85. So long story short, they ended up being great companies. I knew they were great companies. They weren't growing at the rate I wanted to. So guess what? I had to buy back in at a higher rate. So I got in at great rates. I got bored because I kept looking at it not growing. Realized a year or two later that it was a great company. Say, you know what? I gotta jump back in, and now I gotta pay twice as much as I did before. So I always say never to sell, not to sell at all. But hey, everyone, we appreciate it. Thank you very much. Hope you got something from this episode, and we'll holler at you later. Peace.